Trump's energy stocks will help you retire early. This coal company, ticker symbol BTU, had over $1 billion in revenue. Beat consensus estimates slightly. Coal has been around as an energy source for decades, well, longer than that, but it's been the chief energy source until wind and solar started to enter the mix. Challenge with wind is it blows at night. Solar doesn't shine at night at all, of course. So you need these battery storage systems like EOS Energy is providing. There's another company, Bloom Energy, that essentially diverts natural gas near data centers and provides that, gas to electricity conversion on a mobile basis. So you don't have to build a power plant next to every data center that you want to construct. That company stock has skyrocketed, along with EOS Energy has gone up significantly. BTU, notably, also interesting. Coal may be a bit of a sleeper pick. So let's look at this stock, how it's holding in there. And we'll also look at one other stock, WOLF, TeraWolf. The ticker symbol is WULF. It's in the category of Bitcoin miners turned AI data center compute providers. So they've already bought the GPUs or taken out debt to buy them and rented the data centers, and essentially their tenants then become the hyperscalers, the big tech companies, Google, Amazon Web Services, Meta. So it's all trickling down from their wallets and from usage of ChatGPT and cloud storage from enterprises who now believe cloud to be more secure than on-prem after hacks. Executives got their emails hacked about a decade ago. And when that happened to a CEO or two, the CEO of Sony, I think it happened to, everyone said, you know what? I think having our own server and maintaining our own server is crazy. So everyone just ends up using Google Cloud and Amazon Web Services, even for the S&P 500. So that's why these companies make up 30% of the S&P 500. I don't think they're the best investments right now. I think they're a little bit frothy. We did just have the FOMC rate cut come in at 0.25%, 25 basis points, as expected. You can take a look at that if we need to, but we don't need to. There weren't really any changes. So the market might whipsaw a bit, but it's holding up. So BTU and WOLF.
This is Sam Putnam.
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 So here's BTU, $1 billion of revenue for Q3. Slightly beat analyst consensus. There was a net loss. Last year they had a profit. So they're not, one of those massive companies that's been around forever that is just printing money. That's definitely not what's going on here. But in the same breath, there's a lot of new companies that are shaping the future of energy. WOLF is one of them, ticker symbol WULF. It's in the same category as Iron Energy, has Cipher, CIFR, to some extent as Marathon Blockchain, and Riot Blockchain. WOLF, 50 million up 90% year over year in revenue, and they had 7 million from that compute provision, AI infrastructure, high performance computing, whatever you want to call it. So even though most of that money came from Bitcoin mining still, the fact that they're actually recognizing, aka saying that they got money, which they have to be accurate about because they're a public company, from these hyperscalers means that they're able to rent this data center space out to the big dogs, Meta and Google and Amazon, and actually collect money. So they do have a lot of cash on hand as well. BTU, I don't know how long they've been around, but I think this is the main coal company. This summary is just atrocious from whatever this is. I don't know if this is Google Gemini or what, but don't love it. So I think there's some other coal companies as well. Hexcel is another energy company that is in the same breath. HXL. Recent earnings was strong, sort of has a level here, but needs to come back to that to be interesting in my opinion. BTU is already at a level. And then, yeah, I do think HXL, okay, they do aerospace materials, so that's not at all relevant. ARCH, AMR, it's just that these other companies don't move. They haven't been moving. So even though they're peers in the sense of actually doing the same thing, if we look at the charts, this looks horrible and this looks pretty uninteresting. So there's just not a lot of activity besides in BTU, and you can see that in a flag. So this flag is, it is a coal company, but it's almost similar to some other companies that are breaking out that are just adjacent to this data center space. GEV is one that's breaking out right now. It's a much longer flag. It's more of a base, and it was sloping down, but because it had gone up so much, it still was on watch, and we've talked about it being on watch. BTU, the level for this one, I would say it's nice that it pulled back to this moving average and it's a really tight day, and what you can do with that is you can do what other people are doing, which is helpful because they're going to help shape the chart just like you. So you could risk off of today's low, so risk 50 cents to make $5. That would be one way to do it. Or buy over the high here and then risk yesterday's high. So either way, 50 cents to make $5. $5 gets you up here, and that's significant. I mean, it's 15% for just half your position. Trail the rest as these moving averages start to slope up, and then you can still get a filled breakout, right? You could go like this, and then because you sold half, you're fine. Whoops, when it does something like this, I'm going to be able to paint this. I know it. Just need to zoom out a little bit. So even if you get a move like this and then it failed breakouts because, this is a huge move and because there's some uncertainty around this price level, depending on where the moving averages are, if this goes sideways again and forms another flag, you can get the real breakout and still be positioned from here. So that's how you get a move of 20, 30%, up to 50%. Because you sold half right here on that first little move. So that's the idea here. Of course, that idea being applicable to all stocks, but maybe the clearest right here with BTU in terms of making that a reality and having a flag to picture what's going on there. Wolf, a little bit different, maybe risk level wise, that you probably you could risk yesterday's high, but you might want to risk this high. It might make a little bit more sense to do something like that. 50 cents is still a good amount of risk, but this sort of lines up here. So $16 is pretty important, it seems like. And this higher low shows a lot of strength. It showed strength here as well. And this is why getting in on these pullbacks is great. If you get in on break out, it's great. But you can see it actually went down. It came back below its average about a week ago if you got in here. So it's tough to get in on the third green day in a row. And sure, this is the third green day in a row as well. But at least this move is only 10% versus this one being like 20%. So it does matter. The percentages do matter. I know this, if you're newer to using technical analysis, which I don't love that word. You don't like looking at other people's charts, I'm sure, because I don't. But the percentages really do matter in terms of getting favorable risk rewards. And if you look at iron, you can get favorable risk rewards, but I'm not sure this thing is going anywhere, right? There's not a higher low. It doesn't seem interesting. There was a lot of activity in Cypher, but at the same time, it's not actually going anywhere. So there's a difference between tight days and momentum. So you got to have both, and it's not, momentum is not driven by volume either. So if we look at Wolf in the past few days, there's some volume, but it hasn't been crazy volume. GEV was probably the best picture of that. That's super recent. The volume wasn't crazy here, even on this first breakout day. It was only after it's already gone that everyone tries to chase it, right? So the name of the game is to get in before that. And one way to look for these stocks is, here's what we got going on here, okay? We've got stocks over $1 billion in market cap, and then we've got stocks that move more than 2% a day. And the way I'm sorting right here is by average daily range over the last 365 days. You can see that here if you want to. So what that means is that these stocks move the most. This stock moves, I mean, these are a little messed up because they had massive moves. So, you know, AAOI moved 20% on average per day because it's a $20 stock, right? So over the past year, it had some crazy single day moves. You know, this is 30%. So it's not totally accurate, but at least it gets you the fastest moving stocks sort of clustered near the top, which is where you want to be, provided you can be extremely disciplined, diligent about risk levels. NBIS trailing off a little bit. I don't know how interesting this NVIDIA investment stock is. SNDK, the memory stock, this is interesting. You know, to me, it had a pullback. It's reminiscent of Rocket Mortgage, which I talked about in the Discord, and I mentioned it today, pulled back significantly and finding support in this moving average. So here you are, depending on, you know, your entry, there was an opportunity to get in here where you're only risking maybe yesterday's low, 3%, you know, maybe yesterday's close, something like that, 1%. You can't get stopped out here, so it's difficult. But 2%, obviously, in hindsight, would have been ideal pre-market lows. But we'll see what happens here. So far, if you did have a risk like that, you're already up what you risked, and you're getting in at the beginning of a move rather than something like what we just saw in Wolf, where it's a difference between getting in here and getting in up here, where you can get stopped out here. And there's some nuance there, right? I'm not saying it's always a good idea to buy a stock that went down 6 red days in a row, but it did find support on a moving average. It already put in this tight green day. So there was a little bit of a hint, you know, and it's not like a recent earnings reaction that was red like Meta, where it has 6 green days in a row. Here it did have a green day, but it was after a rough earnings. So this wasn't like the most slam dunk, you know, time to buy it. And it also wasn't finding support on a moving average. It was actually going up against a moving average, which should eventually, you know, reject it off of and moved lower. So Meta, it was not, you know, the move there. There may be times where Meta displays a similar characteristic to Rocket in terms of a move down and finding support, you know, maybe here or here, but sometimes it's more accurate to find it in smaller stocks, because a lot of the big stocks, when they go down significantly, and they go down after earnings. You don't find them just selling off like gradually super often. There was a period here in, I guess, late August, if I remember correctly, this was the market as well. Yeah, where it had a little bit of a sell-off of 6 days in a row. So these big days are just going to follow you. Big companies are just going to follow the market down. But I'm not trying to put you to sleep here with all of these examples, but it is reality, because I can put out videos, I can talk about Rocket's lending, you know, how the rate cut makes it great for, you know, giving out lower mortgages, but that's not reality. Like, that's not really what's happening here. Rate cut was expected, so this move is kind of, you know, more based on the market and based on the price structure than about the story. I'll probably get back to the stories because I know people like stories, but I'm just saying. BTU technically looks like it's super firm, super strong, and WOLF as well, super strong and has a level to risk off. If they're a little different, this one is more of like a base breakout. You know, it's not a long base, whereas BTU is more like a flag forming over a long period of time. But they're close. So those are 2 ideas. If you like those ideas, hit that like button. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. And if you want to see tomorrow's idea, the best idea, I think today, was Rocket. Head over to stockscommunity.com. You'll also be able to drop in and see recordings of basically this kind of analysis. So if that's for you, give it a shot. We do have a trial period.
Sam Putnam.
This is Sam Putnam. This is Sam Putnam.